Welcome back, and what a day for the precious metal prices, where you have the gold prices trading nearly 100 rupees on the higher side, and the silver prices nearly 700 rupees per kg on the higher side as well. So it has been a great day. The bit of a decline that we've seen in case of the dollar index clearly seems to be supportive, and this is a weekend that is about Akshaya Tritiya, where the markets are anticipating, even if some token buying, that also is on the positive side. The big downside to this Akshaya Tritiya, the industry tells us, is that this is not a wedding season. So you perhaps may not see that big jewelry, chunky buying coming in, but a token buying, investment buying is something that almost everybody is anticipating. This is what we've done in sense of gold prices in last 1 year, 19% of a jump. Well, just to remind you that we did see an all-time highs in gold prices also in the month of March itself, and that was to the tune of around 61,400 rupees per 10 grams. And we are trading at around 60,400 right now. This is where the gold prices were in the previous year for Akshaya Tritiya, at around 50,800. So 60,800 clearly is 10,000 rupees per 10 grams of a gain that you have seen. And that 2003 price I've just written to ensure or tell you on how the gold prices actually have moved in last 20 years. To the tune of 1,000% of gains is what we've seen. So almost from 5,500 to 60,000 is where we are trading in 2023. That is what gold has done in last 20 years. Should get silver on your screens as well. And in 2003, we were trading at 7,000 rupees. We are trading at 75,000 rupees right now. And last year, the prices were trading at around 61,000 rupees. So a big jump year-on-year basis, and for last 20 years as well. Just marking on what we've done in last 2 decades in sense of gold and silver there. Som Sundaram PR is Managing Director, India at World Gold Council, and he joins us now to talk more about gold and silver prices, the demand expectations, and what you should be doing this Akshaya Tritiya. Som, hi, as always, a pleasure having you at CNBC TV 18. I first of all want to understand on what the ground situation is ahead of Akshaya Tritiya.
Well, you have already stated that high prices are actually keeping the consumers on the sidelines, I'm told. While there's a lot of inquiry, gold is now actually the focus of attention. People are not actually buying into this price yet. But most of the experts say that this is a good price to buy, and gold prices are slated to go much higher strategically and structurally. But retail will always take time to get used to this high prices. The good thing is, Nisha, dollar prices are not at their lifetime high. Still, they are still below 2,000. Whereas the rupee prices have just, as you have seen on the screen, have just shot through. They are almost near the lifetime high prices. So there is still some headroom in the INR prices, and which I think might attract some buyers. But as of now, what we hear is that the market is still at a discount. People are waiting on the sidelines.
So what really is the kind of discount that we're looking at right now, Som, for gold as well as silver?
Well, as you know, on silver, we don't comment on the prices, but gold is, if I remember, it's at $10 or something, and at a discount right now. But the more important thing is, during a time ahead of Akshaya Tritiya, for the market to be at a discount shows the sentiment as well.
Oh, well, absolutely. So also, the other thing has been about the import numbers. With the first quarter just completed, what would you say about the kind of imports that we've done till time?
Well, as you know, last year has been pretty good. We purchased somewhere close to 750 tons. And this year started off with a significant jump in prices. So it is not any surprise that the demand did not pick up, and therefore it has actually shown up in the imports. I think at these prices, even the stores are looking at cutting down on the inventories, because that's the only way that you can save on labor charges not getting wasted by recycling, etc. So it's not a surprise, but I guess it will have to wait till the monsoons. We have always seen, Manisha, the fourth quarter can actually be a big surprise. If the prices hold out at these levels or even start moving up, and the monsoons are good, you will see a very big jump in the fourth quarter. We have seen it in 2021, even after the second wave. The last quarter was one of the best in our data series in 30 years, 345 tons. So you normally wait for the fourth quarter, and that's what I would do this year too.
All right. So when you look at the last 1 year and with 18 to 20% of gains that gold has given you, Akshaya Tritiya to Akshaya Tritiya, a lot of people in the markets tell us that they were under when it comes to portfolio diversification or having gold within their portfolios. A lot of also are lamenting, and they talk to us and they tell us that is it too late really to buy gold at these current levels as well? At this Akshaya Tritiya, what would you suggest? What would you advise?
Well, as I said, it's always good to have 15% in your portfolio, depending on the risk appetite, of course, what kind of risks you carry in your portfolio. That's what we normally say. And trying to time gold prices, gold buying based on prices is always wrong. As you have seen, last year, 50,000 appeared like lifetime high. Now, those who bought at 50,000 seem to be have made a wise decision. So it's very important that when it comes to an asset class like gold, you start accumulating over a period of time, and you just don't try to time the market. It's never possible. At the moment, what we see, and as I have said, many experts say that there is still a lot of headroom for the prices to move up. But there will be volatility, but structurally, there is a lot of headroom for prices to move up.
So how would you look at the central bank buying record highs last year? The first quarter has actually been a follow-up on that further.
Yes, you see, central banks continue to buy, and that is also another very strong point for gold, actually. So the questions obviously are, last year, 1,000 tons never happened even during the gold standard. And now they're continuing to buy. So that definitely means that gold has a very significant role. Is probably going to have a significant role in the overall reserve management monetary system going forward. So therefore, these prices, that's why they said that structurally these prices are attractive if you take a long-term view of gold.
So also, when you look at the investment and during Akshaya Tritiya, I'm assuming a lot of token buying would be happening, if not more. At 60,000, people are still getting used to, accustomed to these kind of levels. What would you say on is a better way of buying? Because when we understand that when you buy physical gold, you have to pay a 3% GST plus making charges on that. So the 60,000 rupees gold per 10 grams actually ends up becoming 68 or even 70,000 rupees per 10 grams if you were buying gold the same quantum.
Yes, I would say, look, unless you really need jewelry, and that's what consumers would do. Unless you really need jewelry, you're better off going in for even a coin or a bar. But more important is, you have obviously ETFs. You have digital gold these days. Of course, it is not regulated, but there are some reputed players. So you could buy those kind of things which are easy to liquidate if you want it, and then move into jewelry when you need them. Because the labor charges on those are also very low. And of course, sovereign gold bonds, as you rightly said, this is one of the best investments, I would say, in any part of the world as far as gold is concerned. So if it is available, you should just go and buy the sovereign gold bonds as well.
So are you surprised that we don't have sovereign gold bond tranche coming in during this Akshaya Tritiya? And also the fact that we've seen the first SGB buying, the redemption for 5 years just go through right now. How are you reading, on what's happening with gold bonds here?
Well, a sovereign gold bond, as I said, is one of the best asset classes when it comes to gold anywhere in the world. It gives you 2.5% interest and an upside on gold, tax-free. You can't get any better than that. I don't think physical gold can compete with that. But the question is, and I think we have issued an overall about 100 tons. The question is, has it met the original purpose of weaning people away from physical gold? Or has it actually added to the interest in gold? That's something that economists have to answer, because it has been very expensive, correct? If you really take the 2015 issue, it was 27,000 or 28,000, if I remember right now, and the redemption will be at 60, 62, whatever. So that is a big cost, and it is tax-free as well. So has that met the purpose? Is something which obviously it needs to be studied by the economists. I think that is one of the reasons why also we don't see too many issues now. But it is available in the secondary market for those who are interested. Small quantities though. But it is one of the best investments, I would say.
I'll wind up the conversation with one final question. So what is your advice to people who would want to go and buy gold? How should you be diversifying within gold buying as well? Is SIP a better way? Should you be waiting for dips to come in for gold? What is your sense? What is that one advice that you would give to buyers?
Well, I would always say that, look, don't look at, not having a GST. Oh, I save 3.5%. Or can I get gold without a bill? I would probably be getting a cheaper gold. That is one way of losing money in gold. The best way is gold is a very good asset class. You have seen it, 50,000, including duty and GST. It has moved to 60,000. It will keep moving on because structurally gold is well placed. So the best way is to go and buy hallmarked jewelry if you need jewelry, or coins or whatever from reputed players, or go for ETFs. If you need better liquidity, go for ETFs and digital gold, and those products which the government has already placed in the market.
Oh, well, absolutely. And I can't, gloat enough on the fact on the way the gold prices have run up. It was 50,000 rupees last year. It is trading at 60,000 right now. 2 decades ago, it was trading at 5,000. So from 5,000 in 2003 to 60,000 in 2023 is where the gold prices have come in. So clearly a huge, huge return continuing from that one. So as always, thank you so much for joining us and talking to us ahead of Akshaya Tritiya and making sense of that asset class called gold. But with that, it's a wrap on Closing Bell. Thank you so much for watching.